Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we're diving into a critical shift in institutional crypto investing, Bitcoin. ETFs have returned to the spotlight after Israel's strike on Iran on June 12th with $1.9 billion in net inflows during the week of May 9th to 13th, pushing total investments to $13.2 billion, a historic high. Ethereum ETFs also gained momentum, seeing $583 million in new allocations, the largest weekly inflow since February. Let's unpack the fundamentals driving this dynamic, regulatory risks, and how this capital flow could shape BTC and ETH prices in the coming months. Record inflows into Bitcoin ETFs, the return of digital gold as a safe haven. Amid escalating tensions between Israel and Iran, Bitcoin ETFs saw a remarkable resurgence. According to CoinShares June 16th report, the week of May 9th to 13th recorded $1.9 billion in net inflows, reversing weeks of outflows that had pressured the market. This surge pushed ETF BTC holdings to $13.2 billion, a milestone reinforcing Bitcoin's role as a digital safe haven asset during global instability. Context is key. Until Monday, May 9th, Bitcoin traded between $108,000 to $110,000, buoyed by expectations that U.S. inflation would stabilize below 3.5%, allowing the Federal Reserve to pause rate hikes. However, Israel's strike on Iran on June 12th caught markets off guard, sending BTC tumbling to $104,000. Despite the initial drop, the reaction was swift. Investors used the dip to buy spot BTC ETFs, rebounding the price to $107,000 within 48 hours. This pattern mirrors gold's behavior during crises, but with a critical difference. Bitcoin's independence from governments and central banks offers a decentralized alternative to protect wealth. Additionally, the $1.3 billion in BTC products during the second week of June suggests ETFs are becoming the bridge between crypto and traditional investors, lowering access barriers and compliance risks. Geopolitical conflict and Bitcoin's volatility. A historical cycle. Israel's June 12th strike on Iran not only sent oil prices surging 7%, but also reinforced the correlation between crises and crypto market movements. Historically, Bitcoin rose from $36,000 to $47,000 within a month during Russia's invasion of Ukraine in February 2022. However, the Fed's March 2022 rate hike later triggered a sell-off. Today's cycle repeats with a critical twist: the availability of spot BTC ETFs in 2022. Institutional investors had to buy Bitcoin directly via exchanges or futures, facing custody and liquidity risks. Now ETFs like BlackRock, SIBIT, and ARKB have accumulated $60 billion in assets under management by 2024, enabling institutions to align portfolios with crises without the technical complexity of wallets and security. The post-strike volatility also amplified the buy-the-dip narrative. Spot BTC ETFs offer immediate liquidity, avoiding chaos from stop-loss orders on decentralized exchanges. This explains why ETFs kept attracting capital even after a 4% drop in 24 hours. While riskier assets like stocks and memo coins faced aggressive selling, Ethereum ETFs, the silent revolution in DeFi markets. While Bitcoin dominated headlines, Ethereum ETFs also showed strength. During the same week, $583 million flowed into ETH products, the highest weekly inflow since February. This coincides with Ethereum's DeFi dominance, hosting 70% of protocols, including Uniswap, AB, and Mercado. CoinShares report highlights the drivers for ETH ETF demand: real-world asset tokenization. Projects like Relt and Frax Finance are converting debt instruments and real estate into tokens on Ethereum, attracting institutional capital. Deflationary economics, with EIP 1559 fee burns and staking yields of 4 to 6% annually. ETH combines utility with passive income, a feature ETFs for commodities like gold can't replicate. However, ETH ETFs face hurdles. The US SEC still classifies ETH as a security in some cases, complicating listed fund approvals. Despite this, European ETF approvals and strong institutional demand suggest ETH is on track to become a strategic bet in diversified portfolios. Bitcoin versus Ethereum. Investment strategies in times of crisis. For investors, choosing between BTC and ETH is more than technicalize, a risk and utility trade-off. Bitcoin, advantages, fixed supply, inflation hedge, and SEC-approved spot ETFs in the US risks. Limited utility beyond store of value, with few use cases beyond hodling. Strategy. Ideal for conservative portfolios, allocating 30 to 40% of crypto holdings to shield against macroeconomic shocks. Ethereum. Advantages. DeFi dominance, RWA tokenization, and staking yields. Risks. Regulatory uncertainty in the US, where the SEC still classifies ETH as a security. Strategy. For investors seeking exposure to emerging sectors, allocate 20 to 30% to ETH, ETHs, and DeFi tokens. With the Fed holding rates at 5.25 to 5.5% and US inflation dropping to 3.4% in May, the macro environment favors both assets. However, BTC gains traction in geopolitical crises, while ETH thrives in economic growth cycles. Regulatory impact, SEC, Fed, and the crypto ETF battle. Despite optimism, regulatory challenges persist. The SEC continues to scrutinize ETH ETFs, debating whether the token qualifies as a security, a classification requiring compliance with securities laws. For BTC, US and European ETF approvals have reduced uncertainty, attracting giants like BlackRock, Fidelity, and JPMorgan, which have already allocated $60 billion to BTC ETFs in 2024. The Fed's rate policies also loom large. Chairman Jerome Powell reiterated that inflation must fall to 2% before rate cuts, keeping the dollar strong and pressuring risk assets like crypto. Still, former President Donald Trump has publicly criticized high rates, advocating for immediate cuts. His potential return to the White House in 2024 could reshape monetary policy, especially if he pushes for a Fed chair aligned with his views. For crypto ETFs, the key lies in regulatory alignment. While the SEC demands transparency on reserves and tokenomics, the UK's Bank of England and the European Commission have approved BTC ETH ETFs. Contrasting with the US approach, this divergence may trigger capital migration to friendlier markets like Switzerland and Luxembourg, where crypto ETFs face fewer restrictions. Technical outlook: how ETFs could drive Bitcoin and Ethereum higher. From a technical perspective, BTC and ETFs are reshaping support and resistance dynamics. For Bitcoin, the $105,000 level has emerged as a psychological floor. With $110,000 as the next resistance, a weekly close above this level would confirm bullish momentum, projecting BTC to $120,000 to $130,000 in H2 2024. Ethereum, meanwhile, faces a critical resistance at $3,200, with staking volume up 12% in the same week. If ETH surpassed $30 billion in AUM, the token could test $4,000, especially if RWA tokenization accelerates. The ETF price correlation is strengthening. Each $1 billion in inflows to BTC ETFs historically drives 2 to 3% price gains, while ETH sees 1 to 2% returns per $500 million in allocations. This suggests ETFs are key catalysts for recovery even in a crypto winter. Is this the end of the crypto winter? Strategic moves to seize the opportunity? The Israel-Iran conflict and lower than expected US inflation have created a perfect storm for Bitcoin and Ethereum ETFs. While BTC solidifies as digital gold, ETH reinforces its role as the DeFi engine. For investors, the message is clear. Bitcoin: maintain a core position to hedge against crises. Ethereum: leverage RWA tokenization and staking for exposure to DeFi growth. Passive income: platforms like Ondo Finance and Frax Finance offer up to 5 to 7% annual returns in stablecoins, protecting against corrections. With ETFs absorbing $1.9 billion in BTC and $583 million in ETH, the market is heating up. What do you think? Will Bitcoin test $130,000? Can Ethereum break $4,000? Share your views in the comments. Don't forget to subscribe for real-time updates and join our live streams, where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. A Bitcoin may be a stellar bet, but always assess your risk profile. Until next time, may the market treat your trades kindly.